Right. So today I just wanted to go through a quick little rundown on why everyone is freaking out and you really shouldn't be. I'm going to keep this as quick as possible because a lot of it you've heard before, but regardless how many times I say some things, still there is a much bigger percentage of the community than I'd like that is still shitting themselves. Um, and I think I'm trying to get my head around this, of why someone is shitting themselves when they really shouldn't be. And I think it maybe is a knowledge deficit or even a data deficit. Because I'm sat here happy as Larry. Yes, I've lost a metric shit ton in personal net worth over the last, or in Q1 2025 so far. But I'm happy. And that's one of the things with crypto. If you can't handle the volatility, then um, maybe crypto isn't for you, or again, it's probably a data slash knowledge deficit. So let's just share my chart, my screen for the moment. And I just wanted to go through a few bits and bobs, which is why I just think things are still very, very bullish. Right. So first of all, in previous crypto bull markets, we've had Operation Choke Point 1 and 2. And Operation Choke Point is basically the mainstream financial system squeezing out crypto on and off ramps. If you're a known crypto dabbler, they absolutely screw you over with bank accounts, myself being the prime example here. I think I've had between 9 and 13 different banks kick me out so far. And I'm a nobody from Norwich. So Operation Choke Point 1 and 2 have been crazy, and it's really hemmed retail plowing in. So that's maybe one of the reasons why the retail bull market hasn't quite kicked off just yet. Also, during that entire time, we've had the CFTC, the Treasury, the SEC, and literally the entire US government and Chinese government all shitting on crypto. Yet we still had two crypto bull markets and quite ferocious bull markets as well. So even with that massive sort of background of the world effectively hating crypto, what happened? We still had bull markets. Now that's completely flipped. Um, Trump literally said the other day that Operation Choke Point is now fully disbanded. You have four main financial arms of the US government. The heads of all of these financial arms are now massively pro-crypto. Um, we've got the Strategic Bitcoin Reserve, the Crypto Reserve, like they are very pro crypto now. So I think yes, this is short-term annoyance, but this is medium to long-term epicness. The burning house reason why I think everyone on pretty much everyone online, all the mainstream pundits are wrong about a continued strong dollar and how the dollar's going to keep on rising is I think they're missing the biggest picture, which is the looming debt maturity wall. I mentioned this the other day, or the other trading pub, or a few trading pubs. The US has $9.1 trillion of refining. They have to refinance $9.1 trillion over the next 6 to 9 months. Now, unless they magic out a miracle out of their proverbial hat or create a brand new way to refi debt, which is highly unlikely, um, they're going to have to massively drop rates before they do that. Well, the main mechanism is they have to sell more bonds. They have to start issuing more debt, but they don't want to issue debt at current rates. So, by the way, $9.1 trillion is 24.8% of US debt. So the US government has to refi a quarter of their national debt in the next 6 to 9 months. How the hell are they going to do that? Well, first of all, tariffs is the opening gambit. Now, before anyone here with Trump derangement syndrome just goes nuts, just try and park that TDS to the side for a moment. And also park that my comment just now to the moment, because I know that probably infuriated a few people. You need to try and clear your mind and try and see things as neutral as you can. I know you all think I'm a Trump fanboy, And to a certain extent, I am, but it's because I believe I am based in fact. I'm based in what's actually happening. Um, and what's happening is he is using tariffs as a massive sort of truncheon to just bash all his trading partners on the head for rebalancing. What's happened over, well, to a large extent, some of well, in fact, so what's happened during the Biden administration is that trading deals have been completely off kilter. I mean, everyone's like going on about the Canadian tariffs, etc. Yet they conveniently miss out that there are 100 to 300% tariffs on the US from Canada in certain aspects, from groceries, dairy, steel, not so much steel manufacturing, but there are way more egregious tariffs that Canada put on the US and also across the rest of the world. So what he has said time and time again is that all these tariffs are reciprocal tariffs. Um, Also, the other thing is that, like that video I made in 2020 of what I would do if I was the dictator of the UK, it's pretty simple. You balance your budget, you balance your book, just like a normal human would be, and you'd increase income, right? It's as simple as that. That's what Javier Milei has done. That's what Bukele, I forgot his first name, but Bukele in El Salvador has done. And that is what the US is doing. They're balancing the budget and they're going to massively increase income. How are they going to do that? First of all, they need to incentivize people to reinvest in the US economy. How are they going to do that? They're trying to make it so that it is not cheaper to manufacture in China or elsewhere. They want companies to actually build factories within the US to increase employment and to make things cheaper. So by using these tariffs, they are literally one, they're either forcing people to reinvest in the US economy and or incentivizing companies to come in and actually set up shop within the US and charge them less in taxes. And so this is a short-term pain for a medium to long-term prosperity slash gain. I think it's very, very good what they're doing. And you've seen, TSMI, sorry, USMC, sorry, sorry, my brain. By the way, I've spent the last probably 4 days in bed. I've had one hell of a thing. Yeah, I've probably spent 15 hours a day in bed for the last 4 days. My brain is still foggy as shit. So TSML has just put in, I think, $100 billion investment into the US economy. They're trying to make new chip factories in the US. I've said before, it takes roughly 9 years to spool up a semiconductor factory, but it's positive step. That's what's happening in terms of tariffs. Um, And because the US dollar is fairly strong at the moment, so tariffs plus a strong dollar equals people capitulating to a certain degree and going, shit. Once the deals have been sealed, Trump and Bessent have said explicitly and many, many times that they don't want a strong dollar and that they want the US 10-year rate to drop dramatically. And the reason why they're wanting to do that is because the US government has zero control over the Federal Reserve. We all know that. It's, the creature from Jekyll Island. Read the book or listen to the audiobook if you haven't done so. It's a completely separate private entity which they cannot control. And Powell has said, matter of factly, he will not lower rates. He's still posturing that rates will not need to be lowered. And therefore, Powell has forced Trump into a game of chicken. And unfortunately, I think it's the adage of don't fight the Fed. I think you don't fight the Don in this case. I think Trump will beat the Fed in this particular game. And Trump is forcing the Fed to lower rates. He's doing that by trashing the stock market. He has literally said, I wish I could find the clip. I think it was, give me 1 second. Give me, well, 10 seconds. If I can't find it, I'll Trump not looking at the stock market. Okay, here we go. Found it. Watch this.
Countries and companies that have been ripping us aren't particularly happy with what I'm doing. But the United States will be very happy. And our farmers are going to be very happy. And again, there'll be disruption. But in the end, I said it before with China, we signed an unbelievable deal with China, $50 billion in purchases, and we're doing great. Biden, however, when he came in, they never enforced that deal. So that's the only thing that basically you have globalist companies that have been ripping us off that won't be able to rip us off any longer. I think that's what the big charge is.
Have you been influenced, some of these exemptions that have been announced and some of these temporary delays, have you been influenced in those decisions because of the market reaction?
Well, there are no delays at all. No, nothing to do with the market. I'm not even looking at the market because long term, the United States will be very strong with what's happened.
Okay, the key thing there, and he said this in another interview, he's not even looking at the stock market. And you have what that basically means is that he's really not caring about stock market price or fluctuations, because part of this whole sort of gambit is to lower the stock market. And the reason why he wants the stock market to be lowered is because the entire traditional finance world is institutionalized into a stock bond split. So basically, any CFA, any investment manager, any economist, they all have the same cassette tape drilled into the brains from university, in that the most optimum portfolio is some form of stock bond split, as in it's typically a 60-40 split. So a good portfolio is 60% stocks, 40% bonds. In times of uncertainty, they then rebalance that into a heavy bond split. Okay, he knows that, the whole world knows that, even an idiot from Norwich like me knows that. So by trashing the stock market, what is he doing? He's signaling, and by the way, a lot of hedge funds, a lot of mutual funds and pension funds, this is not, it's all, I wouldn't say algorithmically done, but a lot of their bylaws means that if the stock market drops by a certain percentage, they then have to rebalance their portfolio into a new stock bond split. So what's happening is that he's created, due to all this tariff uncertainty, the stock market to capitulate to a certain degree. And if you haven't seen the capitulation, which is another reason why you don't really need to worry, the S&P 500 has had a pretty sharp fall. The Dow Jones, the Nasdaq, the DAX, the FTSE to a degree. But when you look at the FANG TM stocks, here we go. They've all crashed quite a lot. The biggest one being Tesla, of course. They've pretty much halved. Microsoft still going down. So, and this is the whole market really, the FANG TM stocks. So by trashing the stock market is making all the TradFi sort of boomers move into bonds. What does that do? When you move into bonds, it trashes the yield, right? So bond price it is 100% inversely correlated. When bond prices go up, bond yields go down. So this is the way that he's forcing Powell and the market in general to lower rates. One second, well, I've lost my place here. So that's that. Also, we have this constant flow of the BRIC nations, or BRICS nation. And by the way, it's not just 5 entities. There's probably about 60 odd entities in BRICS now. They're forcibly moving away from the dollar. They're not buying the US Treasury bonds anymore. Well, they're massively reducing. So countries are either stopping US T-bond purchases or massively reducing it. So the world is forcibly moving away from US debt and also the dollar. That's a constant negative buoyancy at the moment, which is great. And also, if no one's buying the US lemonade from the lemonade stand anymore, there's only one buyer that can buy it. That's the Federal Reserve. So Powell will be forced to lower rates and then buy up even more stock, more bonds. My smooth waving bullet points are still completely valid. Do you remember pretty much every trading pub over the last 6 months, I've said that in 2025, the thing that I am slightly concerned about is some form stock wobble. So when we look at the smooth brain bullet points, many times I've said, right, we're here. We're waiting for rate cuts, waiting for rate cuts, waiting for rate cuts, and then boom, we've had the beginning of rate cuts. Even though Powell, through his long Pinocchio nose, said we're not going to cut rates, not going to cut rates, he then cuts rates. Remember, he's a politician. He's a central banker politician. That's all he is. He has to toe the party line, and he has to posture that postulate. Sorry, not post. He has to maintain certain posture, and then he completely does the opposite. And then for the most of the last sort of 3 or 4 months, I've then said, "Hey, we're over here, folks. We are post rate cuts, and there will be more rate cuts, and we're in this weird limbo zone where we're before the crazy financial stim pumps." Now, the thing that causes stim pumps is some form of wobble. Now, the scale of the wobble was the thing that was rather disconcerting for me, because if we have a wobble scale, so from 0 to 100, let's just say the subprime mortgage collapse was like a 70 on the wobble scale. The tech bubble crash was, around the same. COVID was probably an 80, and a full-on global cyber attack would be, full-on 100, right? So this is the Siam's wobble scale. I wasn't sure of how big this wobble is. What we've just had is like a wobble to the scale of 20, right? It's fucking nothing. But it's great. What's great about this is that it's absolutely nothing. It's a massive nothing burger, but the world is tearing their hair out, which is great because this is the sort of outcry that we need, for stocks to start crashing. And I'm hoping the trigger. So hopefully let's call it the tariff trigger. Tariff trigger. And I'm fingers crossed. I can't draw. This is me drawing fingers crossing. That's a hand with crossed fingers. So I'm hoping this massive media outcry is going to again put more pressure onto Powell, and maybe we will have some form of stim pumps. But by the way, I still do see some form of global cyber attack and shit getting even crazier. So the wobble we had on the 2020 with COVID, it's going to be like that. So when you look at the US stock market, go back to the S&P 500. Where's 2020? Here we go. So 2020, basically the world was ending, especially from an economic standpoint. We had a massive, really deep cut, right? If we had some sort of global pandemic and the internet as we know it stops for a few days, we'd see something like this. But again, all that does is cue stim pumps, and then we'd reverse out of it. So when that happens, I'm not sure, but again, you've got to be blind. You've got to be blind if you cannot see how the World Economic Forum and Klaus Schwab consistently calls out bad shit. The bad shit happens, and then they have a cure for it straight away. So whether that happens now or in 2026, I don't know, but it will happen. But I'm hoping this little wobble here is enough to really force Powell into cutting rates. And yeah, more liquidity equals more cowbell. As I said, we now have a US strategic Bitcoin reserve and a strategic crypto reserve. Now, they're two different things. I'll come on to this, but the key thing is that we're getting proper guidelines now. Remember, the US government has kept the entire crypto world in a state of limbo because the SEC was handing out Wells notices left, right, and center. And a Wells notice is basically going, hey, we're about to sue you. And but we're not going to tell you what we're about to sue you or investigate you on. So the SEC was handing out Wells notices like freaking candy. And it was just making everyone just, uncertain and worried. but now we have proper guidelines. So in terms of the strategic Bitcoin reserve and the strategic crypto reserve, they are completely different things. And I think a lot of people haven't actually read the actual announcement. So one thing I did do very early on is I asked Grok 3, which by the way, Grok 3's deep analysis is incredibly good. Like I don't even use GPT-4 anymore. Um, just try out Grok 3. It's improving on a daily basis. Right. So one of the first things I did when they announced that is that I asked it, hey, can I just have a quick breakdown what the difference is between the crypto reserve and the strategic Bitcoin reserve? And and by the way, that terminology is what everyone used, but when you look into the actual documentation, it's not a strategic crypto reserve, it's a United States digital asset stockpile. And there's some key things here. So um, the key thing here is that to begin with, they're going to kick off both of these directives with forfeited assets. Okay, so any crypto that the US government has seized from illicit activities, that's what's going to fund the reserve and then the stockpile to begin with. But the key thing here isn't with the strategic Bitcoin reserve, the US government will do budget neutral strategies for additional Bitcoin, but there are no additional acquisitions for the stockpile. So any card, so what they've effectively done, looking at this stockpile, is they've gone, right, what are the blue chip cryptos out there at the moment? Okay, and in my opinion, they're shit coins, but Solana, XRP, Cardano, whatever. Okay, well, whatever the government has forfeited, we're just going to keep it, right? We're not going to sell it, or it's up to the Treasury. It's up to Besant to do what he wants with that stockpile. But there are no additional, I need to highlight that, this is really important. There are no additional acquisitions for that stockpile. However, there are budget neutral acquisitions for Bitcoin. And just like I said several trading pubs ago, we have a strategic oil reserve, strategic natural gas reserve, strategic gold reserve. Every government has all these strategic reserves in various forms of in various forms. Well, now they have a strategic Bitcoin reserve, and what they can do, and in terms of budget neutral strategies, they're just going to flop over certain percentages of other assets into Bitcoin, so they can sell off. You know, we had this whole Fort Knox type thing. Maybe that was part of this play. Like, I wouldn't be surprised if the government sold off a chunk of its, strategic metal reserves of some sort into Bitcoin. Um, or the savings that Doge is coming up with, they then plow it into Bitcoin. Don't forget, the Loomis Act is still there. It's still plodding on. It's still in play. So a lot of people have forgotten about that. When the Loomis Act comes through, the US government will be acquiring 1 million Bitcoin over the next 5 years. And those Bitcoin which are acquired, they cannot sell for 20 years. And in 20 years' time, when that sort of vesting process, well, not really a vesting process, that lock-in process is expired, they then cannot sell more than 10% or in any calendar year of that reserve. So I think this is really important. And then when you look at the actual fact sheet that was released, yeah, so Bitcoin is the reserve asset. Everything, yeah, they will not sell the Bitcoin. Everything I've already covered that bit. The government will not acquire additional assets for the stockpile. And that's why I think the crypto market sort of had a bit of a slump. They're like, oh, they got really happy, hey, Cardano, Solana, Ripple. But then they're like, oh, shit. This is important. The United States currently holds a significant amount of Bitcoin, but has not maximized its strategic position as a unique store of value in the global financial system. This is where I think behind the scenes, people are really listening to Jason Lowery with his Soft Wars book. Yeah, by dumping Bitcoin willy-nilly, Biden has cost US taxpayers 17 billion. Yeah, just disjointed handling, no clear policy exists. And that's that's what they're sorting out. So David Sachs, the crypto and AI czar, he's sorting out the admin side of this first. Once the admin side of all this is done, then they can really stride forwards. And then again, they keep on mentioning this move harnesses the power of digital assets for national prosperity rather than letting them languish in limbo. And then yeah, crypto capital of the world that's said that a million times. So not only that, US states are moving rapidly into adopting a strategic Bitcoin reserve. Some states have already rejected it, but some states are going ahead with it. Up to 10% of their reserves they're going to be plowing into Bitcoin. So, this is multiple billions that will flow into Bitcoin. Saylor has a 21-21 plan, a mix of just normal raising and also convertible notes swapping, but he's almost, this is a 3-year plan and he's almost completed the first 21 billion. It's just incredible how fast Saylor moves. And just watching him at that crypto summit, he was just like pulling his hair out and that he's not happy. But yeah, as in he was not happy about the digital asset stockpile. Anyway, when you look at global M2 and the crypto correlation, it's roughly an 84% correlation. So, to the layman, that may look pretty high, and circumstantially, it does look high-ish, especially when you look at some charts. From a scientific perspective, 84% correlation or 84% fit is not that solid. In the science community, nothing is really, golden until you get above sort of 95% or even 90% in some respects. So 84% is a bit tenuous, some would say. But when you look at global liquidity, which is that big turquoise line, you can see there is some form of correlation. Now, I've seen other people say there is a 57% lag. So typically what happens is if you add in a 57-day lag, it ties up perfectly. But US global liquidity is going up. Okay, as I said, we're exiting quantitative tightening. The whole world is exiting quantitative tightening, and we're not in quantitative pumping yet, or support, or whatever they want to call it. But we're just in that weird zone, in that transition zone. But when you look at global M2, we've broken all-time highs. Okay, and that's recently. So Q1 2025, and towards the end of last year, we broke all-time highs for global M2. So this is positive. And when you look at the cross-border capital charts, you can see that in terms of the weekly trend, global liquidity is ticking upwards relatively nicely. And he even covers Bitcoin and global liquidity. So, what we're having at the moment is a bit of a divergence, but it's a short-term divergence. He's clipped off his own chart. That's not me clipping off the chart. That's him clipping off the chart. But what the divergence is that crypto is having a bit of a wobble, yet global liquidity is now starting to spaff out. So, I mean, this divergence will come quickly end, and we'll see Bitcoin, rapidly catch up with that correlation. And cycle-wise, there's freaking nothing is unexpected here. Nothing that's happening is unexpected. Alts are still primed to pump. Obviously, we've had a few false starts, and I've been caught with my pants down, mildly caught with my pants down, with the 2 false starts. So the first sort of false start, I guess, was this one here. I've always been looking at that, 36 weeks post-halving is typically when Bitcoin market share starts to drop, and that is really the starting gun of the alt market. So when I saw this, again, roughly 36 weeks post-halving, I was like, woohoo, here's the alt market. And we did have that mini sort of alt rally where, some shit coins, the meme coin cycle started to pump, yada, yada, yada. But then obviously it reversed. And then if you zoom in a bit, it started, if I really zoom here, this bit here, We then had another false start, or it could have been actually this one here, sorry, here when this starts to come back down. We had two false starts, okay? So I lost a teeny bit of money there, but either way, this will continue to fall down. And I think a high prob target is, around 45% market share, maybe 43%. And again, I should probably every trading pub I get this chart out and I show you the amount of 20 to 30% crashes during a bull market. In every bull market, we have 20 to 30% crashes. And if the market's changed a fair bit, so let's have an updated gander as to where we are now. What is the drop? Let's zoom right in. Okay, so the proper low is a 30%. There we go. From tippy top to bottomy bottom, 30% drop. That's absolutely nothing. We had a 30% drop over here. And the amount of 20 to 30% drops we've had in previous bull markets is nothing. So, I mean, look at the price. I'm just going to move this because you can't see it. But if you look at every single time on the ghost feeds, I've been looking for a bit of a drop like this. And this is exactly what's happened here. So in terms of price action, it's even, it's absolutely spot on. So I think in terms of Bitcoin, I think this is probably most likely the low. Tooth Fairy, it's playing Rust. Jealous. Right, yeah, so that's that. Let's get back to this. I'll talk about that later. Yeah, I think everyone needs to chill out. Now, going back a few things, there's one thing, someone on Twitter, I think, or Facebook, was talking about inflation and how, my narrative of the dollar falling. Oh yeah, so I haven't even shown you the dollar. US dollar, here we go. I said, I gave myself roughly all year for the dollar to get back down here. We're pretty much halfway and it's only March. The dollar has fallen faster than anticipated, which is absolutely great. There is literally 100% probability the dollar goes lower and also rates go lower. And someone mentioned something about inflation and how, inflation is still high, yada, yada, yada. And everywhere you look, there are crazy reasons why inflation is spiking in certain ways. And I find the eggs thing. So there was a Fox News, I think it was Fox or CNN, one of the bullshit news channels out there. They were saying, under Trump, egg prices have gone absolutely nuts. And I instantly called bullshit. So here's Grok. I said, in a year, how many eggs does the average egg-laying chicken lay in the US? Yada, yada, yada. So 300 eggs a year. What's 300 times 150 million? 150 million, and Grok then says 45 billion. So by the way, in 2024, Biden culled 150 million chickens. What the hell do you think egg prices are going to do if you kill 150 million chickens for, again, this is another controversial topic, some bullshit flu, aviary flu debacle? Yeah. So it means if you kill 150 million chickens, that's 45 billion eggs in a year that you're taking out of the supply chain. So if blah 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 blah, so roughly how much of an increase in egg prices should there be if 45 billion eggs were taken out in a year? And it goes through its reasoning, yada yada yada. Final answer: a 45 billion egg loss, which is 48% of annual supply, could increase egg prices roughly 150% to 250%. And I then said, how does your answer compare to the actual price increase in US eggs at the moment compared to last year? And go to the conclusion, my predicted 150 to 250% increase overestimated the actual rise, and the actual rise is 65 to 100% nationally. or up to 167% locally because of blah, 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 blah. So long story short, killing 150 million chickens is why egg prices are going up. And there's, you know, we could spend a long time going through many other ridiculous examples. Um, and also the amount of residential real estate foreclosures that have been covered up by Biden. I mean, we could talk till the cows come home. So long story short, like if you're panicking, you really have no reason to panic. Everything is, dare I say, bullish as fuck. And I apologize for swearing. Um, and like, put it this way, flying is my passion, right? The only, I get really grumpy and almost depressed when I can't fly. I'm selling my plane. I know this is a tenuous link. Um, as I put out here, wow, it's got 21,000. I have a very good two-seater aerobatic aircraft. It's great for touring the country. Um, with the upgrades this is probably 110, 120,000 pound plane. I'm trying to sell this for a fire sale price of 80K. I won't let it go for less than that. And what I'm trying to do here is if I can quickly get my hands on 80K, like whilst the prices of crypto are this low, I'm just gonna plow that all into Tau. Like, so I've had a few tire kickers so far, no joy, but I'm literally trying to sell this ASAP. I mean, it's got one of the best autopilots, that you can get for a small thing. I mean, this ethos here is 30K alone. So long story short, whilst prices are low, if I can get 80 grand, I'm just going to plow it into crypto. If crypto starts moving up and I haven't sold it, I won't bother selling it. As I share all the time, I only tell you what I do with my own freaking money. I always put my money where my mouth is. Um, so like this is a gift. This really is. I'm just annoyed I don't have enough spare fiat because every time I get fiat, I just buy more crypto. And which is exactly what you should be doing in a data asymmetric play like this. This is an asymmetric data play right now because the masses haven't got a clue what's going on. They think the world is ending. They think crypto is about to die. I've had ridiculous calls. I've seen ridiculous calls of Bitcoin going to 50K. I mean, could crypto fall even more? Yeah, I guess. I mean, if you look at Bitcoin right now, we have a massive um, support level over here. But here's like at what was this 70K? But I don't think 70K is going to touch. Like we've had almost identical plays before. Look, if we take this all-time high at 19 odd K, the market then zooms all the way above it, and then everyone goes, "Oh my God, support level here at 20K. Market's going to hit 20K." And what happens is that it fakes it out. Now, of course, it then did much later on, over a year later. But if anything, we're in a similar situation now where I don't see 70K being hit. Um, I think this is the low. I think this is that cycle low. And I'm itching to put in a levered long, as in a positional long. But I'm fully aware that my curse is being early to things. So I'm forcing myself to not pull the trigger just yet. And I'm just waiting to see if we get a little bit more of a move down. Like when you look at this on the daily chart, what I see here is short-term, potentially a short-term bounce to the downside. The market has done a pretty quick pullback into this sort of resistance, and I'm waiting to see if this pulls back. Again, I'm not trying to short this here. I just want to see, what I'd like to see. What would be good is a bit of a sort of a bottoming out. I'm always very wary of sharp pullbacks. I'd much prefer to see a bit of a bottoming out like that. And if we do get something like that, then we can put in a nice levered long. a position along with, something like this where, the upside is whatever, but we put in, a lick level somewhere around here. I've been eyeing up the same thing with Tau again, that this is something, yeah. This is the this is the trade I've been eyeing up for Tau, something around here, where we put in a levered long at, it was on this level here, around 250, and having a lick level below this 163 spike low here. So if I had a lick level, 147, something like that, and then just let this run. Whee! Something like that. Again, I'm just waiting just because I think we're not out of the short-term woods just yet. But again, looking at this, is that a fall in compression? Quite possibly. So I'm personally sitting on my hands just for the moment. And I know I do understand why it looks a bit shit, because if you take ETH, I think that is probably the support level. I know it went below here, but it's been reacted to lovely over there. We've got a major base support breach, across every crypto really. There's base support breaches everywhere. So I just want to wait a little bit before I start going long. And in the meantime, the other reason why I want to just gobble up as much Tau as possible is that the yield is freaking ridiculous. I've got one wallet that's making about 4.5 Tau per day right now. So yeah, and whilst the root staking APY is, I mean, it's hovering around 23% APY. So for me, the reason why I'm obsessed with this root yield at the moment is that if I can just keep on gobbling up, what is, call it 4.5 times 30, I mean, that's just one wallet. It's making 135 Tau per month. And in my eyes, that's a minimum of $5,000. So that one wallet in just yield alone is making 675K, obviously in future price projection. So for me, I'm like every little penny, selling my plane, selling a car, whatever. I've got 3 cars. I don't need 3 cars. I'm trying. I want to sell my third car, just temporarily. So yeah, I'm bullish as anything. What else do we have to go through? That's pretty much it in terms of why I'm bullish right now. And I think we're just in a lull where most people are just listening to the mainstream news, but don't really understand what's going on. And remember, it's not a strategic crypto reserve, it's a US digital asset stockpile, which they will not be buying Cardano or whatever. It's just whatever they confiscate. And they could, by the way, confiscate quite a lot, because drug cartels are now officially labeled as terrorists in the US, which means the US military can now fully take on the Mexican drug cartels. And if they can, wipe out certain drug cartels, they'll probably, gobble up a lot of crypto in that process. So, right, I'm just going to look at the chat box now. This is where I can't see anything. Right, participants.